things now, sorry.
And there's a head and shoulders there somewhere.
And head and shoulders in it, reverse cup handle.
All right, good morning, everyone. Sorry, we had some technical difficulties this morning. Someone's been playing with my machine. We're going to get going here. All right, U.S. markets. Sorry about the small size on the screen there. U.S. stocks obviously traded kind of flatline yesterday with just a bit of mixed action between sectors. You can see there kind of half the sector's up, half the sector's down. Very little directional flow. I think what's important is that after the previous day's rally that we managed to hold quite nicely, I think for the bulls that's going to be a big win and something that we have to see if we can continue the strength to the upside. We're starting to approach all-time highs on the S&P again. The durable goods numbers are a little bit disappointing yesterday, and it's really interesting because the numbers as of late seem to be softening for the last kind of month, maybe a touch longer than a month now, and that's not just in the U.S., it's kind of globally. So it's amazing that we've continued to hold on to this rally, especially after we've seen kind of a maybe 11-12% up move already this year on the S&P. What it did do is it kind of started to get a little bit of momentum going back in the commodities markets again. I don't know if people are starting to think that Bernanke may not pull away as soon as they thought he would, but you can kind of see that starting to happen in the market. We saw the gold counters in the States, Harmony up 13%, Goldfields up 9.5% across the board. Obviously, really strong day yesterday. So it's something that we need to keep an eye on. I think maybe there's a little bit more meat left on that bone. Asia traded well overnight, even the U.S. only having a flat session. Like we said before, gold and copper really traded well overnight. Australia and New Zealand were closed, so you don't want to have a look at anything there. That's just the same as it was the day before. And then South Korean GDP numbers came in pretty strong this morning, so that also kind of helped to lead Asia to the upside. But the corporate action that's still going on right now has continued to kind of be mediocre, I think, at best. You can see Qualcomm came in yesterday in line on the EPS number, slight beat on revenue. Here locally, we had Clicks this morning. Clicks was a miss on the earnings per share and miss on divvy per share. I think it's actually, it's only, what was that, 8 cents on the earnings per share that they missed, but I think that's actually reasonably significant. Obviously, the retailers have been under pressure as of late, but probably not going to be bullish today for Clicks. We also had British American Tobacco that came out this morning as well. They said the sales number was 5% versus expected 3.7%. So obviously that's going to be a nice beat, quite a significant beat, obviously out of BTI this morning. So watch those on the open. Lot of other corporate action today. Got ConocoPhillips and ExxonMobil, probably the two of the three biggest oil producers in the world. Later today, we've got Colgate-Palmolive, we've got 3M, and we got UPS all out in the States later. Another note, MTN a trading statement earlier, just a subscriber update. They had group subscribers up 3.2% to 195.4 million. South African ARPU was down 8.1%, and Nigerian ARPU is down 1.8%. I think that's, from what I understand, a good result for Nigeria. I don't know how much that factors in what's going on, with the forcing them to cut interconnect rates and other rates there. So I don't have enough information really to give you there, but watch that stock this morning. We're going to show it on the charts as well. That there could be a little bit of a game there on the back of the subscriber update. All right, very little in terms of market data today, but we do have. We've got SAPPI, which obviously can influence the retailers here today, so that's something to watch for. And then we've got jobless claims out of the States, which obviously we know is quite a big number, so look for those today. All right, let's jump into the maps. All right. First thing I'm going to show, I've got a lot to show actually today. What in the world? Okay, the first thing I'm going to show is the FTSE, and we're just going to show how we're testing trendline resistance here. You can see quite clearly right at the number, right where we closed yesterday. something to watch for today. There's a couple of these indexes and a handful of stocks that are starting to test what had kind of looked to become a little bit of a downtrend today. And next one is the German index as well. Looks very much the same. This looked to have established a little bit more of a downtrend, and we've failed at resistance more than we have out of the UK. This bounce up the last 2 days has been absolutely vicious. So today, right around where we closed at the close of the day yesterday, I think it'll be a bit of a tussle to try to get it back above those levels, and we may see it fade a little bit before we can actually punch through if there's just nothing to kind of give it that kick through the levels. I'm going to show Anglos here. We talked about this the other day and how we had kind of broken out of the downtrend, which we quite clearly have. What was really interesting and what I wanted to show was just if we look here on the 2-day chart yesterday, I mean, you can see here at the end of the day, in terms of just the volume bars, the buying that came in here at the end of the day was very, very significant. I mean, if I go back to 5 days, for instance, you can see here, I mean, you can see how big that volume is that came in at the end of the day relative to kind of what we've seen. There's some spikes here for, where there's probably a book over in an hour, but look at the persistent volume that was going on there at the end of the day. A lot of buying kind of coming in. One of the biggest volume days we've seen in a while out of Anglos. I think I traded about 8.5 million shares. Just something to take note of. Obviously, we saw commodity stocks really rally, finish strong in the States yesterday. I think, if you can get them close to around price this morning, those and bulletins and some of these shares might be a great little nibble while people are kind of waiting to see what's going to happen. Next one I'm going to show is ARI. And ARI is a lot of these things we just talked about earlier are testing trendline resistance. We kind of temporarily broke through it there yesterday afternoon, but you can see where we closed on the red candle was below this resistance level. Something worth monitoring. I'm personally going to be looking to fade some of these rallies and these commodity prices at some point, and when I think the time is right. To me, they've entered into a really long-term, or not, a bearish pattern, and they've been in a bearish pattern for a while. So I think, the first kind of significant bounces are, in my mind, are probably to be sold. So, but that's not exactly house view. All right, MTN. We'll show MTN as well. We talked about this the other day, and this level here at 65. Let's get it down to the 65 level. Right down here around 65. And how we'd been in this channel between 65 and between about 57.50. We broke through 65 here toward the back half of the day yesterday. Traded up there for most of the day. We did close down around 65, but just above it. I think it is significant that we have managed to break out of this channel, and I think, barring how the market reacts to these numbers, if it's somewhat solid, I think these things could have some legs to run. All right, the last one, I'm going to finish off with a couple of charts, all in the commodity sector and the mining sector, and just talk about how I think there potentially could be a bunch of gap fills that are coming in some of these stocks. One of them, Impalas, which we talked about yesterday, which it's harder to see there. Let's just look at it on the year chart, and you can see the gap fill that we're talking about coming, which is right there. We talked about this yesterday, but here kind of around 124, somewhere between 124 and 126, I think we definitely get to either today on Impalas. Harmony will show. Why is this not letting? HMY. Okay, there we go. Harmony. We're showing a U.S. chart now on Harmony. So this gap fill needs to come up to fill the gap. We need to come up to about 550. It looks like it's going to happen, especially after last night's action. Not very far away, but that's another 2 Rand when you tack that on. There at 550, we could see a gap fill to there. We'll look at Goldfields. We'll actually look at it in dollar price. Not that gap fill there. In fact, maybe Goldfields isn't one that's gonna be looking to fill the gap. We'll look at Anglo Gold. Anglo Gold has the gap that could potentially be filled all the way up to about 20.5, which is it's reasonably far away from there. We're at 1935. We're talking about 11, 12 Rand from here. And then we're gonna look at Sibanye, which also has a gap that can potentially be filled. I'll shorten this up. which is all the way up here. We broke down at around 5 Rand 20. So you can see there about maybe even a whole dollar up for this. What's that? No, that's a dollar, but it was divided by 4. So this thing could have quite a long ways to bounce as well. So really important to watch some of these shares that could be gap filling over the next few sessions. Technically we always talk about here how stocks always fill the gap. These to me look like they could be filling the gap in the next couple sessions. Is something to watch out for over the next little while. And I think that what's also important to take cognizance of in these gold miners is that some of these huge numbers and warrants that were sold a few days ago by Standard Bank that are starting to get really close to the strike prices. We could really see some real gamma buying that comes in on the back of that as we start to get closer to those levels, and I think that we are getting dangerously close to certain ones. So we'll keep you posted on Twitter on that. And that's it for today, guys. Thanks a lot.